With me on the call is my colleague, CFO Ramesh Subramaniam, Financial Controller, Anand Agrawal, and the Chief of Investor Relations, Mr. Soundarajan Kasturi. Q2 has been an eventful quarter for Tata Power with a robust operational performance across all businesses and significant deleveraging through a number of measures that we had laid out in our long-term strategy. Despite COVID-19, the company has achieved very good progress in this quarter. We have seen a sharp recovery in demand with sales in our distribution circles picking up almost 35% compared to Q1, though it's little below than the previous year. Collections in the distribution business has improved, though it was severely impacted in the Q1, and we expect that it will become much better going forward. Our overdues from state discoms have also come down in the last 2 quarters. All our thermal assets have run on higher availability. CGPL under recovery reduced sharply with the falling coal prices, better coal sourcing and logistic management. The fuel FOB under recovery has reduced from 52 paisa in Q2FY20 to 46 paisa in Q1 FY21 to 30 paisa in this quarter. With the fall in FOB prices led to reduced profits in the coal companies. On a combined basis, CGPL and coal-related businesses generated a combined profit of rupees 39 crores without one-offs. We now have 2 back-to-back quarters of profit in this cluster. With the planned debt reduction in CGPL and the merger with Tata Power, CGPL issues are now fully contained and it is likely to become self-sustainable in future. We continue to improve availability across the renewable assets with the company taking over the operational control of certain wind sites and certain preemptive maintenance activities carried out through RCM. However, in the last 2 quarters, we saw very low wind speeds across India due to weather patterns which led to significant reduction in generation. The pickup in the economic activities as lockdown restrictions have been relaxed have helped in our EPC businesses returning to normalcy. Tata Power Solar's total revenue jumped from 405 crores in Q1 to 1014 crores in Q2. Solar EPC business continues its rapid growth with orders received in Q2 of rupees 1,556 crores for 347 megawatt of solar projects, taking the total order book to almost 8,687 crores as of end September, with nearly 2.2 gigawatt of large projects in pipeline. The delays in project execution during the last quarter will be made good in subsequent quarters as we are seeing increased site activities. The current order book is likely to be executed over next 12 to 18 months. Similarly, Tata Projects turned to profit of rupees 41 crore this quarter compared to a loss of rupees 35 crore in the last quarter. With all these improvements, we have clocked a 10% growth in reported PAT to rupees 371 crores compared to reported PAT of 339 crores last year. The company has now reported an increase in profit on year-on-year basis for the last 4 quarters, and this is the second consecutive quarter of PAT increase of 10%. The consolidated revenue stood at rupees 8,413 crores compared to rupees 7,329 crores in the previous year, mainly driven by higher generation in conventional assets, TPCODL acquisition, and solar EPC business, which of course has been partially offset by lower wind generation. The consolidated EBITDA in this quarter was 2,276 crore, up by 7% compared to last year mainly driven by lower under-recovery in CGPL and higher solar EPC business, offset by lower wind generation. The lower coal prices affected the profit of coal JVs in this quarter, but due to improved business in Tata Projects and Prayagraj, the underlying business EBITDA is 7% higher at rupees 2,472 crores this quarter. During this quarter, the company won bids of 347 megawatt of solar projects. With this, the company's renewable project development pipeline moves to 1,237 megawatt, with further 370 megawatt of solar project awaiting letter of award. The total renewable portfolio of the company will grow to 4.4 gigawatt when all these projects get implemented. Moving on to the balance sheet and the progress on deleveraging, we have seen a meaningful reduction in the debt with the receipt of balance ship sale consideration and completion of preferential equity issuance. This helped us to reduce the net debt from rupees 43,578 crores as on 31st March to rupees 36,840 crores by the end of this quarter. Our debt equity ratio has sharply reduced to 1.52 from 1.81 times in previous quarter. Similarly, debt to underlying EBITDA has improved to 4.01 times by end of September. This significant improvement in debt metrics achieved over last few quarters has helped the company to secure an upgrade in its credit rating from CRISIL, upgrading the long-term rating to AA stable, and ICRA changing the outlook to positive on its rating of AA negative. The improving credit rating and the reduction of debt will assist the company in reducing the interest cost and optimizing its finance cost. We are also happy to inform the completion of the defense sale transaction at rupees 1,076 crores, and Tata Power has received cash of rupees 539 crores net of the debt of SED. Besides reducing the debt of the company, this sale also addresses many investors' concerns on Tata Power's indirect involvement in defense-related business, and therefore we expect positive impact on Tata Power's overall ESG ratings. Work on setting up of an InvIT for renewable assets has progressed very well, with the non-binding term sheet now signed and due diligence underway. The progress has been as per the plan, and we are expecting to complete the restructuring in next 2-3 months. We'll share the terms once the binding agreements are in place. The various pieces of our strategy to strengthen the balance sheet is shaping up as planned, and we are very confident of achieving the rupees 25,000 crore net debt target at the end of this financial year. While we work on reduction of debt through divestment and restructuring, the focus on generating strong cash flows and recalibrating capex in line with the cash position will help us to achieve sustainable ratios. Our discussions on the revised GERC framework for compensatory tariff for Mundra is continuing. However, with the significant fall in coal prices, which have resulted in CGPL and coal businesses reporting profit, CGPL is likely to become sustainable on its own cash flow. We foresee coal prices to remain low in the future, which will make the compensatory tariff maybe less relevant in overall context. In the recent businesses taken over, both Prayagraj and CESU have good quarters. In fact, in Prayagraj, we continue to see very strong operational performance, achieving a 76% availability in this quarter. PPGCL also recovered significant part of its receivables under the COVID-19 package of Ministry of Power, Government of India, which was received by the state. Along with the share of PPGCL's profit, Tata Power is also providing O&M services, which is paid separately. We have now completed a full quarter since taking over CESU through TPCODL, and we have seen significant improvements in the operational and financial parameters. Despite COVID-19 related challenges, we have achieved the parameters that we originally planned. We have been able to reduce the provisional billing by almost half and improve our collection efficiency from around 85% in June to almost 99% in the last quarter. We are confident of the turnaround of this business as per our plan in the next 12 to 15 months. The growth in our consumer-oriented businesses continues to be promising, and we continue to build partnerships for the future. For EV charging, the geographical presence of our EV charging network has been enhanced from 19 to 23 cities, and 203 public charging points have been installed. Tata Motors has recently issued a letter of intent to Tata Power for development of EV charging ecosystem required for deployment of 300 e-buses in Mumbai. We have also entered into agreement with MG Motor for setting up public charging infrastructure at their dealers' places. Similar agreement has also been signed with JLR. Similarly, we have received LOA for almost 5,000 solar pumps during the quarters, and we have also been awarded a 6.2 megawatt order for the largest carport from Tata Motors. Our rooftop business presence has now expanded to more than 100 cities, and we have 27% market share as per the latest Mercom report. Our microgrid installations continue to rise with a pipeline of more than 130 installations, and we have been able to reach to nearly 800 customers across 190 villages as of end September. Agreements have been signed with partners to provide efficient electrical appliances, and also along with grassroots energy to explore electricity generation through biomass and biogas technologies. The company continues to make considerable progress towards its long-term strategy, and appropriate actions have been set in motion to address challenges of individual businesses so that the company can deliver an overall value to its shareholders and investors. We are excited about this journey and are grateful for the support and patience shown by all of you in this journey. I now hand over the call to Raymond for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah. Good evening, sir, and congratulations on good set of numbers. So my first question is, sir, I do understand that you will not be able to share the valuation of InvIT. So, sir, can you broad understanding of the timeline, and are we confident that we will be able to close the deal by March 21, including the entire transfer of the asset to InvIT?
Yes, I think before the end of the year, definitely we are confident it'll get done. In fact, we are trying earlier, but definitely before the financial year ends, we'll be completing this.
What about the binding term sheet and any kind of idea on the leverage you are expecting in the InvIT?
Well, as you know, the unlisted InvIT don't have any particular leverage. This will go by finally what the rating agencies and banks agree upon finally when they give out the ratings. And normally one has to form the InvIT to get the final rating and the sanctions. So therefore, you can be. I think the rough ballpark is that the traditional debt equity ratios cannot be applied to an InvIT situation. They are lower. Now, how much lower would finally depend on what the rating agencies and the banks agree upon to give optimal rating as well as good lending terms. So that's a broad indication we can give you. And you know that in the listed InvIT segment, the SEBI's starting debt is 49%. So in unlisted, there is no such limit. So it will be definitely not constrained.
Okay, so secondly on this, in this quarter, we have seen a sharp turnaround in CSU, and there's some higher profit in, this TERPL. Is there some kind of one-off in both the entities?
Sorry, can you repeat? You talked about CSU?
CSU and TERPL, the shipping company.
Oh, sorry, shipping company.
Shipping company and CSU. Both the QOQ and YY number, QOQ numbers are, slightly off. So I'm trying to figure out, is there something one-off there?
So shipping company is only because of the tariff, because it is also linked to the CERC's escalation indices. So when the indices are favorable, they make higher profits. When they eventually catch up, they match the market rates. So it's a what we call the corollary is that when the shipping company charges high, the CGPL pays them higher freight. So for us, in a consolidated manner, it doesn't matter because the earnings of the shipping company is the cost of CGPL, right? So individually, it doesn't matter. But to your question that why is it different? That's because it is influenced by the CRC indices. And now, your other question was on CESU.
CESU, yeah.
So CESU,
QOQ, there's sharp improvement, yeah.
Yeah, so one, that is more because of the application of the relevant accounting standards in such acquisitions, where the accounting standards require you to follow a certain process, and which has been adopted here. So last quarter it was not adopted. So as a result, the last quarter's reported loss was reversed in this quarter. As a result, you are seeing that increase, but actually this doesn't belong to this quarter.
What would be adjusted number, if I may ask?
Adjusted number would be 2 crores.
Understood, sir. Thank you, sir. Thank you. Thank you and best of luck.
Yeah. Thank you.
Thank you. The next question is from the line of Murtuza Arsiwala from Kotak Securities. Please go ahead.
Yeah, I have 2 questions from my side. One on the on the balance sheet, we see the capital work in progress increasing. Would that be largely attributable to renewable assets, or if you could give some color in the last 6 months? And second is, while I understand that the low under recovery makes you less dependent on the compensatory tariff, could you give some color on where the compensatory tariff is sort of progressing? Because in long run it's still a risk mitigating sort of measure. So where are we in terms of signing the compensatory tariffs?
So to your first question, the answer, Murtuza, right? So
yeah.
The first question is that So you asked first about
the capital work in progress.
So that is largely renewable. Okay.
Yep.
And we have some transmission projects in the regulated businesses which is going on. So both are the ones, and they are likely to get converted in the next 12 months, before next 12 months. So that was one. The second is on the compensatory tariff. Where are we? So as Mr. Sinha outlined in his initial remarks, while we are in discussions with the government, clearly that progress has to be made. There are differences in the initial conditions and the subsequent conditions that have been put. So we are in discussions with them. But I think we are coming more and more to a conclusion that if the long-term outlook on coal is not likely to firm up very soon, so really speaking, for us, this is becoming less and less relevant. And what we have done is, keeping that in view, we've actually kind of already sized the debt down. And by the end of the year, or let's say in the coming month, we might see CGPL debt go down to as low as 4,000 crores, which will mean that it will become self-sustaining in any case. And as you know, there is a hedge which operates, as a result of which, if the coal prices were to go up anyhow, we do have a hedge in the coal companies. So our overall plan has been always agnostic of any solution that is coming out of compensatory tariff.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Puneet Gulati from HSBC. Please go ahead.
Yeah, thank you so much. So just continuing on this.
Mr.
Sorry, we are not able to hear.
Mr. Puneet Gulati, we can't hear you.
Hello, can you hear me?
Yes, sir, we can hear you now. Please go ahead.
Okay. So on the compensatory tariff, is it fair to assume that you are not pursuing the issue with as much vigor as you would have been earlier?
I think you are putting words. We are. Our view is that if they come on our terms, it could have been a different issue. But right now there is no such traction. So
okay.
Also, for us, see, we can't be running the business on certain things just going our way. So we are planning completely to make this business run on its own, and that's the steps. Those are the steps we're already taking.
Okay, great. My second question is, in your standalone balance sheet, there is a 17,300 crore of debt which has significantly come down. Out of this, how much would relate to the regulated business?
In so about 6,000.
Okay, 6,000 would be regulated, and the balance 11,000 odd is unregulated, is it? For the other investments.
Yeah, all the other investments, and the rest of the non-core asset sale plus the dilution in the renewables business, all this will cut it down to a much lower level, which is reflecting more closer to finally something above the regulated debt, which will be there.
Okay, great. And on the SED sale, will there be any capital gains tax implication?
No.
And to what extent? No.
No,
okay.
No.
Okay. That's good. That's all from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Swarmin Maheshwari from Edelweiss. Please go ahead.
Yeah, hello sir. Thanks for the opportunity and congratulations for a good set of numbers. Sir, 3 questions. Firstly, you did mention that you guys are expecting the lower the coal prices to be at the lower side, on the for the future reference. Now, my first question is with respect to that. Do you think that it then really makes sense to look at the coal mines, because for CGPL, coal can be really outsourced from somewhere else also. So is there any thought process that we will be actually looking to sell our coal mines also at some point in time?
So right now our first focus is to get the license renewal in KPC, as you know. The good news is that in Arutmin, which was the other mine which we sold and we have not closed the transaction because we have not got the full money, there the license extension has come through. So once the license extension comes through, we will have to look at all these options. And at the end of the day, everything will depend at what value and what is the response we get.
Okay. All right. So secondly, on the divestment side, now we have actually realized a fair bit of divestment proceeds from our non-core investments. If you can just actually, share what is now pending to be realized in Q3 and Q4 from the non-core divestments.
So right now we are pursuing in our list of assets the Georgia investment which is a hydro investment, and the Zambian hydro investment, and lastly, defined as non-core, we have Tata projects. So and there is a smaller coal mine which is ESSR. So all these 4 assets are there, which in the coming quarters and months and we will continue to pursue. That's pretty much where we are.
This sale of the proceeds from the defense business, this has been realized in Q3. So the impact on the balance sheet that will be reflected in Q3?
While we are trying everything, I must say that because of COVID and because of the sentiments in the market on the assets which we are out in the market, both in Africa as well as in Indonesia, I don't think that we can expect a closure in Q3, but certainly we are trying to do it in the quarters thereafter. Because the process is on, by the way. We are not letting up the process, but the traction is something which we have to keep a close watch on. But we are confident of getting it through sooner than later.
Okay.
But I must tell you, in addition, that our target for net debt we will meet nevertheless, even if we are delayed on these, because these are not very high ticket items. These are not going to move the needle. Our broader target of going under 25,000 is on track.
Right. And sir, did we receive anything from Arthaman this quarter?
Yes, we did. I'll give you that number separately while we discuss. I just ask somebody to give. How much?
Yeah, and maybe if you can also give the pending amount. The last time.
Sorry, 33. How much? 33 crores. So it is about 6 million. So 5 million.
Okay, 6 million. Okay, so the pending amount from Arthaman now would be about $160 million.
Yeah, correct.
Okay. And sir, finally, one last question. What will be the captive order book in our solar EPC? Would it be about 50-odd%?
Captive. What is the balance? Third party order? 45%? Third party. So about half is captive.
Right, sir. Perfect. Thank you so much, sir, and wish you all the very best. Thank you.
Thank you. Yeah.
Thank you. The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead.
Yeah, hi, sir. So my first question on the stake sale of renewables to the Invest platform, from a consideration point of view, how much premium also can we look at? And the next question is on, sir, as you said, the coal prices you foresee as subdued prices. On a net-to-net effect, taking CGPL as well as the coal SPVs, where do we see our profit in those two segments going forward?
Okay, to your first question on the premium on the sale of renewable assets, I'm afraid we can't share with you right now because the transaction is still in process. So as and when the final value will be available, we will be informing formally. But you know the market, so you are in a good position to assess that. But and your other question on net on CGPL and coal. So once we complete our debt restructuring of CGPL, then we expect that together these two assets would be a slight positive, and they will continue to be so regardless of the coal price, because one or the other will take the benefit of the movement in coal prices. That is the whole objective of ensuring that we don't put any more equity or support into the combined assets.
Okay, so just to as you mentioned that the consideration and transaction taking place and can't disclose, just what is the benchmark that that is being decided on, taking on a premium on this? What kind of parameters that looked at?
So Anupam, I think you are in this business, the standard parameters are in these kind of businesses an EV to EBITDA or price to book or DCF or a combination of all these things. This is the standard valuation, and we follow the same methodology, or even the investors follow the same methodology. So the only limited point is we can't guide you with a number because we are in transaction mode, so we can't disclose that number. But you can see the latest deals that are happening in the market, and I'm sure that you'll be able to get to a ballpark.
Right. I'm getting that. And sir, last question on the when can we expect the restructuring, as in the merger of CGPL to the standalone as well as the Tata Power Solar?
So both these are now, the merger proposals are in NCLT, and hearings have begun, and we expect, of course, it's difficult to say that on behalf of NCLT, but I think next 3 to 6 months should be a reasonable time period by which these things should be over, because in between we do have processes of creditors meeting or shareholders meeting, etc. So that process has to be followed up.
Okay, sir.
We do expect to get it done before the year end.
Okay. Thank you, sir. I'll back to you.
Thank you. The next question is from the line of Aniket Mittal from Motilal Oswal. Please go ahead.
Yes, thank you for the opportunity. So firstly, I think we won certain projects on the renewable front itself. So, just trying to understand what would be the overall capex that we're expecting for FY21 and for FY22, particularly on the renewable front.
So we have currently about 650 megawatt of assets under construction, and typically that would be about close to 3,000 to 3,500 crores. We would be spending probably more than half of it, or a majority of that capex will be over in this year. Some spillover, depending on the progress, would be there in the next year.
Okay. And how much of that do we expect to commission this year?
So commissioning this year, we're targeting 650 megawatt, but maybe it will get spill over to next quarter. That will because of COVID, a lot of delay has happened in the first half. So we are catching up.
Okay. So we also have other projects, right, that are lined up. I think the work would have started, but we still have. So what the overall dependency is higher than 650 megawatt, right?
The 650 is our own development.
Okay. Okay.
That is under construction.
Okay. Understood. And just from an overall perspective, let's say 3,000 to 3,500 crores on the renewable front, how much on your regulated businesses can we expect the capex to be? Because I think there are certain FGD plans that we had for from our district.
So I will tell you the number. The total capex that we expect in this year, FY21, is going to be about 3,800 crores, in which half of them would be renewable and the rest would be amongst various regulated businesses, and there will be some for the new businesses, which is essentially EV, and some would go into some of the non-regulated businesses. But largely, about 85 to 86% of this is going to regulated and fixed tariff businesses.
Sure. And also from the solar manufacturing front, we've seen a decent uptick in the execution during this quarter. What sort of execution can we expect, let's say, over the next 12 months or so? We do have a healthy order book. I'm just trying to understand in terms of, let's say, revenues. Is everything normalized? I mean, what sort of execution do we see over there?
I think the current order book, as you know, is 2.2 gigawatt, right? That is the order book.
Right.
About 9,000 crore is the order book. Now, the whole issue is that since the activity level has just picked up, we would assume that about half of that would be probably next year, and most of it would be, the rest would be covered in this year.
Okay, sure. One question on the shipping business itself. Now, I was actually wondering, given that we've actually sold those 3 ships, our EBITDA and PAT number ideally would have been impacted because the revenue and the EBITDA from that would not have come in our financials, is what I was expecting. But still, the overall number seems to be pretty high. So, I'm just trying to understand what's happened over there on the shipping business front.
So first is that we have sold the ships, but we do have the contract. Okay, so the business operation continues. The only thing is we don't own the ship, but we have the contract. Second, this high number which you're seeing is mostly to do with the tariff linkage to the CERC index on the fuel price. So those are, and in the last revision of the index was high, so the revenue book there was high, but consequently CGPL pays also a higher amount, right? So while on a consolidated basis, it is a zero-sum game, but individually the shipping companies would seem to have made a higher profit in this quarter. But this will subsequently there will be a catch-up because it's a time lag between the actual shipping prices and the final notification of the app.
So just when you said that which are don't own the ships but still have the contracts, so the revenue and EBITDA from this is still flowing in, is what you're saying. And this would then sustain. Yes,
absolutely right. A certain minimum level of EBITDA will sustain, not as high as this because this is more due to that carry forward of the index effect. Once the index is normalized, we'll be having a slightly lower number, but yes, there will be EBITDA.
Okay. And for the festival fund, you mentioned that we've done an adjusted PAT of around 2 crores. So I'm just trying to understand what is the overall T&D loss over that festival?
Overall, at present, it's
maybe the overall AT&C loss for the T&D loss, you can just help me with that.
Just 1 minute. I just tell you.
At present.
Over end. So it is 28.1.
28%.
Yes, 28%.
And we have brought it down from 40%.
Okay. And so what would be the AT&C overall? I mean, it would be around 80% or so?
No. This is 28% is the exit quarter end AT&C.
Okay.
As of October. Now, as per the tariff, which has been fixed in 3 years' time, we have to reach 23.7. Okay. That's where we are heading.
Okay. And largely, our trajectory in terms of the reduction of AT&C loss would be similar to that has been sort of the normative T&D that has been fixed in the tariff. Is that fair to assume?
No. So, the correct statement to make is that trajectory is in line with what was, let's say, targeted in the bid. Because if it is higher, then you will see losses.
Right,
results,
exactly.
Right? As long as you are seeing positive, that means we are on track.
Sure. So I mean, with an AT&C loss of 28%, we are coming with a positive number. That means largely it's close to the normative number.
Yes.
Okay. And so maybe in your PPT, you mentioned sort of a broad sort of outline in terms of the consumer-facing businesses that you're highlighting. So could you give certain insights into what sort of revenue or profitability can we expect from some of these businesses, particularly in the solar pumps front or the EV charging front from, let's say, a 2-year perspective?
We don't give too many forward-looking statements. I think we had shared with you all the FY25 target on all these businesses.
Right.
So we are tracking them on a 6-monthly basis because
Hello?
Members of the management, we can't hear you. Participants, please stay connected while we reconnect the line for the management. Please stay connected while we reconnect the management line. Thank you for patiently holding your lines. We have the line for the management reconnected. Over to you, sir.
Yeah, I think the question was around how are we doing on the new businesses of rooftops and pumps, etc. I must say that this of course quarter as well as 6 months have been seriously affected by the COVID-related issues, but otherwise we believe that second half would be far better and we will be able to pick up pace. But we are working seriously now on all the marketing and distribution and launching initiatives. So you will see the results in the next 4-5 months. Hopefully year end would be we'll be able to make good progress on that. But on the ground, things are working as per the plan.
Okay, all right. Thank you. I'll get back in the queue.
Thank you. The next question is from the line of Abhishek Puri from Axis Capital. Please go ahead.
Yeah, thank you for the opportunity and congrats for good set of results.
Thank you, Abhishek.
Sir, two things. One, in your presentation you mentioned for Mundra there is some SCED scheme one-off. So could you elaborate what is that?
Okay, this is a scheme where dispatches. There's a central scheme which says that if your cost of variable cost of dispatch is lower in a certain order, then you will be asked to dispatch out of turn, and the difference between your dispatch rate and what is available in the market is shared with you. So that is the scheme which the Ministry of Power runs, and therefore we have and it shows actually a sign of competitiveness amongst the merit order dispatch. So that is the income which depends on what the market opportunities are available. We sometimes make money, sometimes we don't.
So what is the amount here, one-off amount?
No, I think last year we had earned, there was a loss. This year it is not there.
Okay. No one-off this time?
No.
Got it, sir. Secondly, it was interesting to know on the K2 front that you're tracking the trajectory within the second quarter itself. Could you tell us in terms of the accounting change that we would have done or followed here?
Well, it's not accounting. Okay, let me put it this way. It's not accounting change. It is that adoption of the standard, because remember that the first quarter there was not even we didn't have the proper accounts also from the takeover of the company, so we could do the accounts finally in the second quarter only. And the accounting standard says that if you have a business acquisition which has a certain trajectory of investment in the initial period, and then that investment is recovered in the revenues later on, then you can offset, you can take it to the balance sheet, because these are plans, and therefore as long as it's sticking to the plan, it doesn't affect your bottom line. So that is why we said that we are tracking it, because that's the way the standard works. That if we don't track it, then you'll have to provide for the loss caused by not tracking it as per the plan.
Fair enough. That's well understood. So in this scenario, would we put some of the capex and interest and depreciation into balance sheet, right?
No. So as far as the new investment is concerned, which is capex,
okay,
that will reflect as ROE, just like any other regulated business.
Right.
Okay, that will come to the P&L. Only the AT&C related deficit would go into the balance sheet. And positive also. If you are doing better than the plan, then it will be positive. Portion will go to the P&L. If it is worse than the plan, then the negative will go to the P&L.
Well understood, sir. Thanks for that clarification. And lastly, the merger tax benefits, what would be that amount and when can we realize this? This is subject to NCLT hearing right now.
Yes, subject to NCLT, and it is effective 1st April 2020 as per the NCLT application. So whenever the order becomes effective, it will become effective from 1/4/2020. So the tax benefit in that sense, assuming that the scheme will get approved, have started to already tick. But you can't recognize it until the order comes.
Okay. And for the regulated business, we cannot take these tax benefits, right, for the Mumbai regulated business?
No. Until the order is in hand, you can't.
And if we are able to do the InvIT here, sorry, just a clarification on this. If we are able to complete InvIT, say, before end of this year, so a large part of that gain can be offset against this?
Yeah, if there is a capital gain on that, yes, it can be offset, of course. And also there is a past gain losses also available. So therefore there's room for that.
I was just trying to understand how soon can we utilize this.
No, it will be effective. See, the meter started ticking. It's just that you can't click it until the order comes in hand.
Right, sir. Right. Thanks so much and all the best, sir.
Thank you, Abhishek.
Thank you. The next question is from the line of Shubhadeep Mitra from JM Financial. Please go ahead.
Good evening, sir. My questions were around CESU. So just wanted to get an understanding that given the COVID-related impact, has there been any regulatory relaxation that is available on the AT&C loss thresholds as per the earlier contract?
No, there is no relaxation, but I think the regulator has promised to look into the trajectory if required. But as of now, since things are getting back to normalcy, we don't see any special relaxation.
Okay, understood.
Thank you. The next question is from the line of Anuj Upadhyay from Emkay Global. Please go ahead.
Thanks for the opportunity and congrats on good set of numbers.
Thank you.
Also, two questions, starting with the 3 distribution circle in Orissa, which we have bidded out. So any timeline, sir, when can we expect the final outcome to be? And the follow-up to this would be, we have learned that in the NESCO circle, we are the sole bidder. So would it be fair to assume that the NESCO would come to us, or there are some conditions which we need to comply before assuming the same?
As you rightly mentioned, NESCO, we are the sole bidder, so the regulator and the government is taking a view whether they would give it to us based on our offer or if there's going to be a rebid. So once we get clarity, we'll be able to decide on the next course of action. As regards the 2 bids where we have submitted, we expect by end of December they will possibly come out with the decision on the same.
Fine, sir. Second one on the Mundra, sir. The presentation mentioned that in October we have already repaid around 2,600 crores of debt and another 1,500 to be paid, likely to be paid in November. So with this, we are targeting to repay around 4,000 crores for Mundra. So any targeted level overall for Mundra over next 1 or 2 years where we would feel comfortable enough to make the plant self-sufficient? The debt level, I'm asking, whether we are targeting to bring it below 10,000 level, 8,000 or something. That would be helpful, sir.
No, it's already, we in the next month or so, we will be infusing about 1,500 crores. That is the plan already there. With that, we will be down to 4,000 crores. That's all third-party debt. Okay, no more than that. So, which will sustain the company in any case on that, because if you see the EBITDA trajectory, then you will see that will easily sustain.
Fair enough, sir. That's it. Thank you.
Thank you. The next question is from the line of Dhruv Muchal from HDFC Asset Management. Please go ahead.
Yeah, thank you so much. Sir, question on CESU. You mentioned that the losses have come down, AT&C has come down from 40 to 28%, which seems quite impressive given that we have taken the circle only about 3 or 6 odd months. So given the initial success, do you think there is probably initial thoughts on can we probably beat the 23% target over the next 3 years significantly?
So first of all, I want to clarify that the 42% number is also aided by the problem in COVID. We had a collection issue. So it was not that it was having initially all along the same number. So it was much lower when we, but for the collection issues in COVID. But yes, it is coming down on track. And to your question on 23.7, yes, we are hoping to reach that target much earlier than the target as per the regulator plan.
Okay.
We are trying to do something in the next 12 to 18 months, what was supposed to take 2 years. 3 years.
Okay. So what number did you start with, the AT&C number?
This was a temporary phenomena because we took it on 1st June. So this was the COVID period. Otherwise, last year, they had a AT&C of 30%. So the trajectory was made on that basis. So on a temporary basis, because of COVID, it had gone up to 40%. But otherwise, we have already reached a level of 28%.
Got it. And so initially, at least I was expecting that for a couple of years, CESU will be on a pact level, probably will be a drag, some marginal drag, but it will cause some drag. But given 2Q and given probably some change in the accounting, do we expect now that at least we will be breaking there or marginally positive, at least for the next 2 years?
Well, one can reasonably say so. We are confident of meeting our trajectory, in which case then we won't have to book any additional losses. And then the only capex and the equity regulated equity that is there will keep us earning the ROE. So your conclusion is right. If we do our job well, which is what we are doing today, I think we should be marginally positive.
Okay. So the accounting works this way that as long as the target which you have set as per the agreement or as per your internal target, as long as that is met, you can, that is okay. I mean,
Correct.
That will not cause a drag to the P&L.
Correct.
Got it. So the target for, by the end of third year will be around 23%, which currently the actual loss is around 28%.
Correct.
Got it. Nice, sir. So secondly, if I look at the Mundra plus the coal JVs and plus the logistic companies, this quarter is the best ever quarter that you have done probably in the last 2-3 years. I understand one part is because of the logistics one-off that you mentioned. But sir, is it fair to say this is not a one-off because you mentioned that Mundra is already paying that amount. So in the next quarter, Mundra will have a higher EBITDA and there will be a lower EBITDA in the logistics company.
Correct.
So this is not a one-off as such. This is just
this is a one-off as far as shipping company is concerned.
Okay. But from a pure complete
perspective,
not a one-off. So if you can say something on what's driving this strong performance, is it the Mundra, I mean, some efficiencies that you're probably gaining in Mundra in terms of lower coal cost or, what's driving this? Because after the shipping company, we thought there should be some impact on the EBITDA. I mean, I understand they will still generate EBITDA, but there should have been some impact on EBITDA. But despite that, the numbers are quite strong. So that was the...
Yeah. So the reason is twofold. While the market fell, our mines also launched very strong cost control measures, and they've been able to absorb a significant portion of the price decrease in the market. And that is, that's something which our coal companies do it, but they've done a good job in these last 6 months in terms of cost cutting everywhere, and therefore they have reduced the impact of the price. On the other hand, in CGPL, we have managed to purchase coal at much lower than the market, and that is also because of, I would say, taking advantage of the current market. We have been able to buy good shipments at attractive prices with higher CV. So when you do a combination of good quality and cheaper logistics cost and cheaper FOB price, you end up beating the market price. So I think what has happened is in this quarter especially, and we have been seeing this for the last 6 months, that our ability to squeeze costs in a glut scenario is much higher at CGPL level, and the coal companies are tackling the price decline by putting severe cost control measures. So it's both ways.
Got it. So, sir, if I have to put it this way, the under recovery absolute amount will be about 200 odd crores for the quarter. If I just do the volume into the under recovery amount that you have given. Right. So, how much of that would have been higher if this efficiency sourcing would not be there?
Oh, it's difficult to give one number for efficiency sourcing because the quality and quantity and CV factor. Maybe we could give you some rough number. Maybe later on Rahul will share with you.
Okay, sure. And so just last two quick ones. In your presentation, you mentioned that 150 megawatt at Methon is the PPA is expiring.
Yes.
So, okay, so the PPA is getting over. Is it the long-term PPA is getting over?
No, there is a right to one of the buyers to call off the PPA in a certain interval, which they are opting for. So we will find alternate buyers.
So we'll tie up that power with others.
Okay. And when is this expiring, sir?
It's September 2021.
Yeah. September 21. Okay. And sir, last thing, actually this was kind of a suggestion if you can probably help us, because renewable is becoming a bigger portion of your business now. Of the under construction capacity, if you can help us provide what would be the revenue that you will be generating, because that will help us model the business better, because there are multiple projects at different tariffs. So for us, building that is extremely difficult. But if you can help us provide what the potential revenue would be of the under construction portfolio.
Sure. So we will, Rahul will separately tell you the rough math that when the under construction assets come on board, what generally is the EBITDA and both PAT. A rough math can be given to you, which will give that.
Give the revenue also would help, because probably you would know what.
From there you can always work backwards.
Yeah.
Sure. We'll give you that.
Thank you, sir.
Thank you. The next question is from the line of Aniket Mittal from Motilal Oswal. Please go ahead.
Yes, thank you for the opportunity. See, most of my questions have been answered. Just one question on the working capital front. You mentioned that there is some amount that you've received from the Atmanirbhar scheme, if I'm not mistaken. If you could just quantify that amount and, just trying to understand your trajectory in the receivables front, could we receive further amount over there?
You're talking about Arutmin?
No.
The receivables front.
Huh? The money that has come, see, the main money
you say Prayagraj.
So that is for Prayagraj.
Atmanirbhar. Oh.
That's the main money for Prayagraj.
So that is the money for Prayagraj. We received what 1,200?
No, 750.
750, 1,200 is the total.
Another 750 is expected.
So I think currently we are at about 3 months odd outstanding in Prayagraj. So money is coming in trickles on that.
Okay. And any sort of pending amount that we expect to come from the scheme?
From the
scheme? From the Atmanirbhar scheme, is there further amount that we expect to flow in from the scheme?
Well, only few states have really gone for it. I think Tamil Nadu has also opted for it. We are a recipient of that, but I won't be able to share with you exact numbers.
Telangana has
gone.
But our money from Telangana, due money is very small.
Yeah.
Okay. And overall on the renewables front, what will be your receivables amount? Total receivables?
About
1 plus.
About 1,000 crores.
1,000 crores. And maybe just one question on the on the trajectory of how interest costs are moving. One is obviously there's an upgrade in our ratings that has happened, and also the overall interest cost environment right now is pretty benign. So just trying to understand from an overall interest cost trajectory, how do we see that moving? So is there any sort of benefit that we can get in terms of lower interest costs?
No, certainly. But remember that we have been getting very fine rates all through, higher than our ratings. So we do expect already it's bottomed out in some ways. We are also seeing that first the next couple of months we have some more monies to be received. Once that happens, we'll have to see how we have to churn between short term and medium term and long term. Maybe that will have some effect, but broadly our weighted average cost should come down further a little bit in the next 2 quarters.
And just one last question. So I think an earlier participant had highlighted about the profits that you have at CGPL plus the coal mines. That number looks a bit high. I was just wondering, is there any sort of lag benefit that you've got at CGPL? Because the prices have gone down, but maybe your tariff has not been revised. I'm just trying to understand from a sustainability perspective for the coming quarter. Is there some lag benefit that you're getting at CGPL because of the PRC?
So actually, no, there's not much of lag benefit, because look at it, there's 2-3 things here. One is that yes, there is a lag. Okay, yes, that in the second half there will be a catch up. But on the other hand, we had a higher PLF in the first half. The second half will be lower PLF. So there will be some benefit around that. So therefore, they may probably offset each other. So to answer your question in short, I don't think there is a serious one-off that is affecting these prices. They seem to be going in this direction because of the factor I mentioned some time back, right? There's a good pressure on costs on the mining side.
Okay. All right. Okay. Thank you. That's it from me.
Thank you. We'll be able to take one last question. The last question is from the line of Swarnim Maheshwari from Edelweiss. Please go ahead.
Yeah, hi sir. Thanks for the opportunity again. Sir, have we awarded the Prayagraj O&M contract to our O&M business, or is it still done by someone else?
No, it's Tata Power.
Okay, so just wanted to understand, are the benefits of the O&M, because we are one of the lowest O&M procurers, O&M guys. So just wanted to understand, what is the current O&M cost that is it for Prayagraj?
So your point is right that we are one of the most efficient, but since it's an individual contract, we normally don't disclose, but we can sufficiently say that we are doing a good job over there, both technically and financially.
Okay, so the efficiency are already reflected in the numbers?
Yes, absolutely. Because we do book that in our services.
Okay. And sir, lastly, just on solar EPC, what are the kind of EBITDA margins in this EPC business, and any guidance for FY22 as such?
So it's generally in the late single, early double, that kind of range, depending on which contract you piece. But it's not. The market. The market is very tight on EPC. So it's generally in the single digits, but at the end of the late single digits.
Okay, and FY20 guidance on FY22, you did mention that you do expect your existing order book to get exhausted over the next 12 to 18 months. So I think a substantial amount should come in FY22 then.
Yes, that's correct. But we can't give you a guidance on the numbers, but you've seen the order book. That's about 9,000 crores, and that will all get materialized over the next 12 to 18 months.
Perfect, sir. Perfect. Right, sir. Thank you so much.
Thank you, sir.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to Mr. Sinha for closing comments.
Thank you very much for all of you for joining the call. And whatever additional information is required, you are most welcome to reach out to us. My colleagues Kasturi and Rahul Shah will be more than happy to provide you the required information. And you all take care and stay safe. Thank you.
Thank you very much. On behalf